Everyone, just a quick video today, doing some more about the trend trading ideas, and I've got a video coming on Origins as well, which I've been trading really successfully recently. I've just kind of adjusted the risk on that, and been getting some really nice returns. So I'm going to do a video on that as well. Right, so the trend trading idea, we've done a lot of videos on high risk to reward, but had a really good chat with Adam, one of the members here, and I always get a lot out of my chats with Adam because we come at trading from very different points of view. Although we agree on a lot of things, we have slightly different trading personalities, and when I do have these chats with Adam, it always it inspires me to kind of look at things from different angles as well, and it's quite often where we make our best learning experiences, if you like, because you can get stuck in one train of thought and just anything that doesn't really fit with your beliefs, you tend to dismiss it, and I think sometimes you can miss out on good learning opportunities there because I'm not saying you have to change your beliefs, but it's always worth trying to find out why something doesn't fit with you and testing it. And so, I've been doing these trend trading ideas with the idea that we hold for very big risk to reward trades. And in testing, that works really well. And so, as an example, when I tested August on the euro yen, using the sort of an aggressive stacking method, I found that the higher risk to reward made much bigger returns. I think it was something like, I don't know, maybe it was 33R or something like that. Okay, on the high risk to reward one, and that was at 4R targets. Okay, and when I tested 3R, I think it only made about 11R for the month. Okay, so your gut instinct is to say, well, this is the best target to go for. But what Adam challenged me to consider was that the biggest return is not always the best option for your trading. And then we went on to talk about Sharpe ratios. Okay, which doesn't just consider the profits you made, it also looks at the downside risk. And so in some instances, the smaller return will be safer to trade. There'll be less risk involved. Now, having a good Sharpe ratio is, and if you're, I imagine most of you understand Sharpe ratios better than me, but if you don't, then just Google it. There's a lot of really good information about how it works and how it's calculated. But it's not the be all and end all. There are limitations with that calculation as well, because I'm not going to go into any depth explaining it, but it's not the be all and end all, but it is something that you should consider, your downside risk. And the problem with the higher risk to reward trades is the drawdowns can be very large. And essentially what you're doing with all these trend trading ideas is you're basically gambling on this happening, an extended trend in one direction. That's what the gamble is. And as long as you get enough of these, and you get a certain amount of luck with how the entries set up and the TPs, then you're going to make money over the long run. Okay, but the more you stretch your risk to reward, the greater the possibility is of an extended flat period generating such a drawdown that you don't make profit, because you've got a long way to come back up from a deep drawdown. So, that being in mind, making big profit is not the only answer. So I went back to testing and said, okay, well, what if we aim for something that makes much more modest gains, but has much less downside risk? Okay, I looked at various ways of doing this, being more selective with the entries. I had a look at that. That works quite nicely. And the other thing I looked at was a much smaller risk to reward. Okay, because I like looking at these risk to rewards that are kind of the ones that people don't look at. And people tend to be either 1-to-1 risk to reward or 3-to-1 risk to reward, and I like to kind of stretch outside of that a little bit. But all I did was I repeated the testing with 2-to-1 risk to reward. Okay, so you're obviously going to get a much higher win rate with that, and you can still capitalize on these big sustained runs. And what I find with testing that is it works really well at reducing the drawdowns. You'll find that you just kind of in the sideways periods, you just kind of bump along. You make 3 or 4R, you give 3 or 4R back, you drop 3 or 4R, you make it back, and you kind of bumble along, not really making money or losing money, and then you get a sustained move in one direction, and that's where you make your profit. Now, you're not going to see like huge returns over a month or depending on what time frame you're trading, that you do with the higher risk to rewards, but those drawdowns are massively controlled. And so like always, whenever you see an element that's good, like the big returns from high risk to reward trading, it's always worthwhile looking at the flip side of the coin, if you like, and that's often what I get from chatting to Adam. That's why I like to chat to him about trading, because he generally does things different to me. And so that's kind of the sort of tip this weekend, is perhaps look at the things that you really like and you tend to do all of the time, and try and kind of look at some ideas outside of that and see if you can add them to your trading. So that's it. Leave me some comments below, and like I said, I will do an Origins video this weekend.